Hello and welcome to all the people in the Bloomberg New Economy community and listeners around the world. I emphasize listeners. Some of you may only be hearing us, but we're hoping to resolve those technical problems very soon. We didn't want to wait any longer to get going with this session hosted by Mastercard. You've heard a lot, those of you who've been listening to the first day of the New Economy Forum today, about an inclusive recovery. The focus of this special day on finance and trade has been about making sure that capitalism, that globalization works for everybody. And we're interested in this session in thinking about the possibilities for data, technology, for digitalization to play a part in achieving that as we rebuild in the wake of this pandemic. Before we get started, I want to encourage all the delegates to the New Economy Forum to join us and submit questions via the live Q&A feature. If you haven't used that already, look on the left side of your screen. You'll see a navigation bar. Third icon down, there's something that looks a bit like a few rooms, silhouettes of rooms, room info. You click on that and a panel on the right side of the screen will open. And if you select info there, scroll down, you'll see live Q&A. I suspect if you've navigated other platforms like this, you will not find it nearly as complicated as it sounds. But when you find that live Q&A, please use that to submit any questions you may have at any time. I'll be seeing them and I will feed them into the discussion when I can. But with that, it's my pleasure first to introduce Tim Murphy, General Counsel of Mastercard, for a few words of welcome of his own.
Stephanie, thank you. Thank you for that kind introduction and for in keeping us up to date with the delay, but appreciate that. And delegates, good day to you and welcome to this very important session. I think the theme of inclusion is the theme of the year, given the extraordinary challenges of 2020. Mastercard is a technology company in the global payments industry. Our business is to connect millions of businesses with hundreds of millions of consumers around the world to enable commerce to happen. And we understand deeply the importance of inclusion. We thrive as a business when middle classes rise and thrive. We have made a commitment to inclusion as a key part of our strategy to bring over 1 billion people into the financial mainstream by 2025. And so this topic is very important to us. And we look forward to the dialogue, expertly mediated by Stephanie, and are deeply appreciative of our founding partnership with the Bloomberg New Economy Forum. So welcome.
Thank you, Tim, and we'll look forward to hearing more from you in a moment. But I'm delighted that we also have some fantastic input coming for this panel from two other speakers, Geeta Gopinath, Chief Economist of the International Monetary Fund, and joining us from Brazil, Fabrizio Bloisi, Founder and Board President of Movile and CEO of iFood. Geeta, let me start with you. You have the global perspective. You're sitting on the mountain of economic data and analysis that is the International Monetary Fund. You highlighted this issue and the challenges of ensuring an inclusive growth and what the downside risk that we're seeing in the economy as we try and work through the pandemic in your recent IMF World Economic Outlook. Just give us a sense of the scale of the of the challenge. Are we looking at a potential lost generation across the developing world as a result of this pandemic? And what can we do to stop it?
Oh, hi, Stephanie, Tim, Fabrizio. It's a real pleasure to join you all on this panel. I mean, Stephanie, at this point is absolutely clear. I mean, the pandemic is devastating lives and livelihoods everywhere across the globe. And as we speak, the number of cases are rising to record levels in many parts of the world. So we're still living with this virus. Now, of course, let me start with the bright spot, which is that in the last several days, we've got good news on the vaccine front. And that certainly gives us hope that we will see an end to this pandemic in the next several months. But we still have a ways to go. And there are still many problems to deal with. Now, what we've highlighted is that this pandemic is leading to an increase in inequality within generations, across generations, and across regions of the world. So while we've seen employment come back up from the depths of its collapse, this is still well below pre-pandemic levels. We are seeing a polarization in job outcomes. So if you look at prospects for low-income, low-skilled workers, women, young workers, they've been harder hit in this pandemic. Secondly, what we're seeing is that the poor are getting poorer. We have projected that 90 million people will enter extreme poverty just this year in 2020. And lastly, we're seeing a big rise in regional inequality. So if you look at the prospects for emerging and developing economies, excluding China, and you compare that to the prospects for advanced economies, now the loss to per capita income over 2020 and 2021 has been greater for the emerging and developing economy group, excluding China. So we're seeing an increase in divergence of prospects. And coming out of this, even once we have a solution to this pandemic, we should recognize that the world is transforming in big ways. One, we're likely to see a much bigger digital imprint. That can be good, that can help with e-medicine, e-education, and so on. But at the same time, with greater automation, we also know that tends to create a jobless recovery. So one has to be very careful about the implications of these trends. And secondly, governments will exit this crisis with different legacies. They will have high levels of debt. There will be a generation that lost out on schooling in 1 year at least. And all of this has very large implications for the future.
And just to follow on a few of those points, I mean, you've highlighted the risks. It is very striking when you look at the numbers that the developing world has by and large perhaps had less of the public health impact of the crisis has not been as we might have feared, and has not been on the scale in terms of infection and in terms of fatalities of the advanced economies, largely for demographic reasons. But the economic hit has been enormous, as you say, and there's this prospect, and the governments have not had the deep pockets to respond in the way that advanced economies have. What's the thing that you're worried about most right now? I mean, on an earlier panel, Raghuram Rajan, the former head of the Indian Central Bank, highlighted that risk of debt problems in emerging market economies. Is that sort of on your to-do list before anything else?
I think the first on my to-do list is to make sure that the innovations that are happening with vaccines and potentially with treatments and testing is globally available. Because I think that, to me, is the number one way we can arrest this increasing and prospects that we're going to see around the world. So for me, that would be the number one. And yes, debt is a very important issue. There are countries that are already with high levels of debt distress, and which is why we've been pushing for, that in some cases you would need debt restructuring and do it sooner than later, because you need to free up resources to deal with this crisis.
And you talked about the impact on the poorest being the toughest, and of course that's right. We've seen some of the most vulnerable in society most affected. How well have governments done, and how well have they worked with companies in the private sector to get support to those vulnerable groups?
There has been a large amount of fiscal support, $12 trillion across the globe, but the truth is that it's concentrated in advanced economies. So advanced economies have spent 20% of their GDP, emerging markets have spent 6%, and low-income countries 2%. So you can see the 26-2 drop that you have there. Now, on the plus side, because countries that put in place digital forms of providing services are more easily able to get money in the hands of the needy. So we are seeing that. We are seeing income support measures being undertaken. But like I said, despite this, we are projecting, and so the World Bank is also projecting, a substantial increase in extreme poverty. So clearly, we're not fixing the problem as well as we should.
And Tim Murphy, we've just talked, and Geeta mentioned that there are we expect to see a certain amount of digitalization, automation accelerate as a result of this. We've seen it all in our own lives. But but SMEs, small and medium-sized firms, have such a crucial role to play, not just in the recovery, but in spreading opportunity and supporting the broader economy out of this. What are the priorities that you can see?
Stephanie, that's right. And I think Gita's comments on rising inequality, I think, are powerful and well taken. Look, the reality is we've seen two trends in the last year. One is a dramatic acceleration towards all things digital commerce. In our own numbers, if consumer spending is up 1 or 2% year over year at this point, the digital spend is up 50, 60%. So an extraordinary shift online into digital environments. And at the same time, we've seen dramatic impacts on small businesses around the world. If you just level set, small businesses are absolutely essential to the global economy. They are, 90% of all businesses, over half of GDP, over half of employment. And the reality is they have suffered mightily in 2020 as a result of the pandemic. And at the end of the day, there's only three things a small business needs. They need to get paid. In our business, they need access to capital, and access to capital remains a fundamental issue exacerbated by the COVID crisis. And they need now, given the shift, to increasingly get online and to get digital. The challenge we see is that small businesses, in some respects, are least able to make that shift to digital, which will enable their participation in the economy of the future. And if we can't support them in doing that, then I think our chances for delivering a more inclusive recovery are limited. And so we're calling for serious action to help support small and medium-sized businesses, not just with seeing them through the short-term impacts of COVID, but frankly, over the long term, to help them get digital in the same way that large enterprises are able to manage their businesses digitally. And that involves a whole variety of things. In our business, it involves payments, but frankly, it also involves making sure that small businesses have access to the tools they need to protect themselves in cyberspace, where their capacity is very limited. There are needs on capital planning and a whole variety of issues. And I think there's a role here certainly for governments and good policy, but there's also a role for private-public partnerships and private-private partnerships, because after all, small businesses are our customers and they are deeply embedded in our supply chains for those of us who run large companies. And there's real work to do. I've been very impressed by the level and extent of big company commitments to support small and medium-sized enterprises. Mastercard announced a $250 million commitment to help small businesses get online safely, but many other companies have too. And I'd like to think in the coming months we'll see these initiatives have impact, but good policy is critical as well, not just for short-term recovery, but to sustain small businesses over the longer term.
And just to ask you, I mean, what are some examples where the policies have really worked? And you highlighted the importance of making sure access to capital is there for small businesses. Governments have focused a lot on trying to get on lending programs, emergency lending programs for small businesses. But for the kind of more proactive and constructive, future-looking support that you talked about, are there examples you would highlight?
A few. I think that we've seen some proposals, and we've helped support them in the U.S., for example, to use some of the fiscal stimulus to help small businesses secure themselves online in the future. So to invest in training and programs for stronger cybersecurity online. We think that's an example of the kind of conduct-based policy beyond access to capital that can be useful going forward. But the reality is there's not been a sufficient, I think, dialogue in many countries about what exactly small businesses need. And we risk, I think, a lot of diffuse efforts delivering less than the outcome that we desire. And so I think the essential thing, and here's where the Bloomberg New Economy can help, is to drive a dialogue about the policy priorities, not just coming out of stimulus, but in the next 12, 24, 36 months to help sustain small businesses with this specific issue. How do you help them get online? How do you help them embed in online supply chains? How do you help them reach consumers around the world? The innovation is there. The entrepreneurship is absolutely there. It's the tools and the capabilities to now take a main street, a physical main street, and turn it into a digital main street. That's the kind of policy conversations we think we need to be having.
is that difficult transition for countries, because governments were very good at doing things to put a floor under the economy when it was in free fall in the beginning, but actually now helping it grow is a different kind of policy discussion. Hard to have that when you're still facing a rapid spread of the virus. Fabrizio, let me bring you in. You have really grassroots experience of this challenge for businesses, and new challenges and the new prospects for digitalization to really help people that came through the pandemic. Tell us a little bit about your experience the last few months.
Sure. Hello, Stephanie, team, Gita. We run through the most challenging months of our lives over the last few months. We run the biggest food delivery network in Latin America, and in a few months, we grow substantially. Today, we touch every month 35 million people. We deliver 45 million meals per month with a very, very strong growth. But the important to say is that since March, when we started the lockdown, the company used a lot of technology, AI, data science to first guarantee health in our network, in our ecosystem. So very fast, create new tools, new software, new logistics systems to make sure that we have social distance between the drivers, to avoid payment in cash, to enable the drivers to deliver the things without contact. We did it like in 2, 3, 4 weeks. Then we entered with lots of fintech services, very strong fintech services, where we gave $800 million of cash flow for 250,000 restaurants so they can keep alive. So we really put a lot of money to make sure that all restaurant network in Brazil was alive. And then we went to the people that need food, that the Brazilians in need. We partnered with many companies, Mastercard, one of the big partners, so thank you, Mastercard, and the other 2 or 3 companies and more millions of customers to distribute, I think, 1.3, 1.4 thousand tons of food for Brazilians in need. All of that in 6 weeks using a lot of technology. And that's why I started saying what we did to show using technology company, using a lot of technology, using the best innovations that are available today for the technology company, it's possible to move much, much, much faster to connect to the people in need. For example, the fintech services here in Brazil, we connected 30 million people to receive government money through fintech. Today, the government is using companies like us to give small credit to small companies. And everything is moving really, really fast, much faster than usually the government do. So my big point to you is it is possible to do big things fast, collaborating much more, public and private. Obviously, I only see people talking about the big tech, the technological companies, how the governments are going to create regulations on the companies. But that I think are necessary, to be honest. We need more regulations. However, there is tools related to artificial intelligence, data science, fintech, security and crypto, mobile, that disrupt the way we can reduce inequality. And the government is walking in one speed. The bigger technology companies is walking 10 times faster. Because of COVID, we started to collaborate more, and the progress was substantial. So the big question for us is how to keep it going, how you can make it 100 times bigger. I think we, in this forum of new economy, we have the responsibility as business leaders to say how the government and those companies can really cooperate. I think Larry Summers and even Bloomberg started the conference saying the billion-dollar question, the trillion-dollar question is how to cooperate more in terms of government. My question to us here, let's answer it, is in terms of companies, how we cooperate more, because we have answers, we have tools, we have requirements of reducing inequality. It is possible. We are doing that for a few months. Let's make it 100 times bigger. That's our challenge. We are working for that, but I think everyone has to get into the same mood.
But Fabrizio, I want to get Gita's response as well. But Brazil is a great example where a lot happened in a short time. And actually, Brazil has been more active fiscally than many other emerging economies, spending a lot of money. I think that the program for the very poor, the cash program, spent more in the 6 months of this year than 6 years of the Lula program, the Bolsa Familia. But there is going to be, there's going to be a lot of pressure to bring all of that back, that money, to roll it back. The president's own advisors don't want to carry on spending at that kind of level. How do you hold on to the progress that you've seen and that focus on that part of the society and the great public-private partnership you've talked about?
I think what you just said is completely related. Is it possible to use government money, as we did in the last 5 months, to make the economy run better? Yes. Is it sustainable in the long term? The answer is clearly no. Even US, many big economies can't sustain the level of incentives we have right now. So the challenge is we have to make the economy run better. We have to make the economy work better. So instead of giving money directly, what the government is doing right now is using internet marketplace as iFood to give credit. And I can give credit to 1 million business, to 500,000 delivery partners, to hundreds of thousands of restaurants. I'm sure credit card, as Tim just said, is doing the same thing. So the question here is, if we just do things that are unsustainable, we will have to pay this bill very soon, and we might have worse years ahead than this year. What we have to do is collaborate more. It is possible with credit, but not only credit, technology, innovation, data, to deliver the right money to the right people that can have high impact. And as I said, today there is more money in Brazil to the stimulus just described. I believe, and lots of people in the economy team believe, the future is collaborating with fast company to distribute money through credit. That's how we make the economy run faster, with the capillarity and the speed that is required and that the time requires. And my point to you all is, internet companies can be a part of this answer. Internet companies can collaborate to move faster, are working for that, and push strongly over the last few months to do that. So let's go to page 2 and work more together.
I like it. The voice of optimism and activism from Brazil is nice. Is nice to hear. Geeta,
I am a tech founder.
I asked a similar question that I asked. Ask a similar question I asked to Tim in terms of potential examples. When you look around the world, there's many of the same challenges, but also technological opportunities when you're trying to help as many people as possible quickly and think about the future. Where would you point to as hopeful possibilities or things that you'd like to develop and spread around the world?
So firstly, indeed, Brazil has, in terms of fiscal spending, has done one of the largest in relative to other emerging markets. Has been substantial, very effective in reaching the most vulnerable in the population. Now, technology has played a very important role in targeting cash into the hands of the most needy. We've seen that happen around the world. Technology is also very important in providing, telemedicine. It helps with education, but of course, every one of these countries is not prepared to have that kind of technology deployed. If you look at internet penetration, it's only half of the world that still has internet access. And so there are very big parts of the world. If you look at, for instance, sub-Saharan Africa, there is not the kind of internet access that you would want, despite the fact that if you look at mobile money, they've really grown in leaps and bounds. And that's also true for countries in Asia. So if you really want to be able to use this particular tool, governments will have to invest in digital infrastructures, and they will have to invest in providing the internet foundation. But this is going to be a public-private partnership here too, because while the government can invest in the internet infrastructure, it should provide the regulatory environment to make sure that these services are properly provided. The private sector will have to play a very important role. In terms of the financing, and I think this is a very important issue, just go back to something you said earlier, which is, yes, countries have spent, which was needed during this crisis. Debt levels have gone up, but governments will need a medium-term fiscal framework to ensure that they're on a sustainable path with respect to their spending and the deficits and their debt. And this will require measures both on the revenue front and on the spending front. I mean, some countries, pension reforms will be needed. In others, you want to be able to be more effective in collecting revenues. And here also, I would say technology plays a very important role, especially in terms of revenue collection and in terms of targeting your spending so that you don't have wasteful spending. In both these regards, technology can play a very important role.
Just to remind everyone, we're getting some questions in, but just to encourage those of you delegates to the New Economy Forum to use that room info icon to go and contribute to the live Q&A. But Tim, maybe we should broaden this out a little bit and connect to some of the big macro conversations we're having, because of course, when you think about opportunities for small businesses, part of the point of digitalization is that you're thinking of national opportunities becoming, or local opportunities becoming, global ones. So what's, if we have a US administration that's now going to be have a more constructive, shall we say, attitude to the global trading system, do you think that will be part of this agenda?
Well, Stephanie, let's hope. I think your question gets at a key issue, and it's really another way of answering the question you asked me earlier, which is what supportive policies can governments adopt to help advance a more inclusive economic recovery, particularly for small businesses. And I think Fabrizio actually touched on an issue that is very powerful, which is about access to credit and new ways of thinking about supporting credit access for small businesses using the kind of digital platforms and the extraordinary data that they now produce. That's a really exciting area, and it's something we can come back and talk about again. But to stay macro, I think this is a moment when I'm hopeful that governments can look again at the broad trends in trade negotiations over the last several years and recommit to a constructive approach that can help drive economic recovery, particularly for the engines of entrepreneurship and innovation that are small businesses. And the moment, the environment is rather, I don't want to say bleak, but rather dark. The reality is we in our business and many others continue to see significant trends towards trade restrictions going up. We're very concerned about issues like data localization mandates in markets around the world, people really stepping back from cross-border digital trade, free flow of information across borders. We know from McKinsey that free data flows, which I think we've been at a relatively high watermark in world history on in the last decade or so, have contributed something like 10% to GDP growth, and that further restrictions on data flows across borders can, depending on the economy, shrink GDP anywhere between 0.5% to 3% over time. And so this is a huge issue. And so I'm hopeful that this current environment, with the new administration in the U.S., we'll see a recommitment to a conversation, whether it's multilaterally, I don't know, but perhaps coalition of the willing, or indeed even individual countries, to a trade agenda that's focused on the new digital economy that we're building. I'm struck by how much all of the conversations we've had on trade really relate to the physical economy, physical goods, commodities, and so on. And yet the future is all digital, and digital trade is so unprotected in global regimes. And so I'm hopeful that we will see something out of the WTO process. Certainly, the U.S. is active with Australia, the UK, and others. We've seen the announcement today, although that's not much covering trade. This needs to be on the agenda, and I think both large companies and small can make positive contributions to it. But we've got to seize this moment to drive a new conversation about free digital trade across borders and re-energize some of the current efforts.
And Geeta, when you talk about the digital divide and the challenges we still face, if we're going to see that as a big part of the future, making sure that everyone is part of that, how is the IMF helping governments think about this? What's the chance that we will accelerate our ability to cross the digital divide as a result of the COVID crisis and the things it's brought to light?
So let me, before I answer that, let me just add another point to what Tim said, which is that, yes, we certainly need a new set of trade agreements for the 21st century that include services trade. But to that, I'm also going to add that we also need a new international tax regime that is appropriate for the 21st century when the world is going to shift to be a much more, digital world with much more greater reliance on services trade. Now, coming back to your question, Stephanie, on the digital divide, this is a big issue. And like I said, there are many parts of the world that don't have access to the internet. That's 50%. And even within countries, there is great disparity. The urban areas have it, the rural areas don't. The rich have it, the poor don't. The quality of the access is not the same. And so investment is going to be needed over here. And the question is, how do governments make that investment, especially if you don't have the fiscal space for it? This is going to require grants, concessional aid from the international community. I think that's going to be important for countries to be able to achieve this goal. And also partnerships with the private sector. That would be another way of making sure that they can do the necessary investments. Secondly, to get people to use these internet services, even in countries, some countries will have to provide subsidies to ensure that everybody actually uses that internet access that they have been provided. So they will need to do that. And you've seen that actually happen during the COVID crisis. You've seen countries like, for instance, Malaysia, El Salvador have provided those kinds of subsidies. And also you want the small and medium enterprises to have the resources they need to invest in information communication technology so that they can actually also catch up with the new economy. So it will require funding, and it will require funding from international sources and also from countries raising their own domestic revenue. And like I said before, technology helps also in better targeting government spending and ensuring better tax compliance.
Fabrizio, you talked a lot about technology and the positive advantages of technology accelerating some of these improvements for people. But as you'll know, when people hear you talk about technology advancing and AI, and I know you've been a part of the move to drone-assisted deliveries with your deliveries. A lot of people get worried when they hear about that. They feel that it's going to be too much change too quickly, that jobs will be lost. How do you manage that balance, make the technology work for humans?
I think it's an amazing question, and that's the kind of thing we should change our mindset. Yes, some jobs will be lost, and much more jobs and better jobs will be created that will deliver a better society. And that's what have been happening for 200 years. We have the Industrial Revolution 200 years that created lots of wealth for Europe. We had the Internet Revolution 20 years ago that created a lot of wealth, especially for US and China. There will be more revolutions related to AI, related to more services, related to Internet. And we need now to reduce inequality. And to reduce inequality, it's very important that emerging markets as Latin America, as Asia, as Africa has local technology, good innovation, speed in adopting new technology that makes the economy work better and create new services. So we can try to say, no, let's stop the innovation, or we can try to say, let's use the innovation to create jobs. And that's our responsibility. Here in iFood, we created a foundation, we call it 1 Billion Foundation, to try to make life better for 1 billion people, delivering our technology to NGOs and foundations to help them. That's what we need much more. We need to embrace the good side, because with this technology, we can make people's lives better. For example, we are being slow in using technology for education, and that's a disaster. Education should be the first place where we disrupt how we educate people using smartphones and broadband connections. Gita just said about the digital divide. A few hours ago in this forum, people were talking about we don't need the universal income, but the universal broadband, because creating tools to people have education through smartphone anywhere, not only in the cities, but anywhere, makes the whole country moves better. So we created here a foundation to try just to share our technology, our team, our people, volunteers inside the company to make education work better and to create the jobs of the future. If we don't change anything, probably Latin America will lose jobs to probably US and China. But what we have to do is to invest in emerging markets to make us not stop innovation, but embrace innovation to create jobs. So the three areas I think we are doing bad today is education, creating jobs of the future, what requires, obviously, digital education and digital connection, and health. The technology is much ahead what we are offering today in education, in creating jobs and health, because the companies are using the best technology possible, and the governments are moving slowly to adopt that. I think when we do it very well, when we collaborate to do it very well through tech NGOs that have the focus of spreading technology, we will have much more advances in educational and job creation. I think that should be the goal of every big technology company. We have the ESG, environmental, social, and governance goals. Every big tech company should have ESG goals showing we are growing users, but we are also growing in how we impact the community, the society, using our technology. The technology is there, the impact is required by the people that in needs, and reducing inequality is a must right now. So I don't think, I see in the forum people thinking we know we have to talk more about digital. I think you are being too soft. It's a requirement to take the most of digital and innovation and technology so we can help faster smaller business and people that need and reduce inequality. It's a requirement. So instead of discussing, should we talk or not about tech companies, we should say, how do we create tech NGOs that really give it back? That's what we are trying to do in iFood. We have some results on that, but I need to have results to 1 billion people. So I have to work more. Let's keep working.
All right. Well, I'm going to just ask Gita to comment on the beginning of what you said. It's a huge issue in economics. I don't want to stray too much into the academic literature, but I know that Gita, you've mentioned that, of course, historically we have always seen technology produce productivity growth and enough jobs to go around, but there are question marks about the pace of digitalization and automation, which does look set to accelerate as a result of COVID. What's your view? Are you as confident as Fabrizio is that this will all end up with the right amount of jobs being created, or what's going to make the difference?
So, Stephanie, I mean, firstly, I am also a big believer in technology, but at the same time, I think there is consensus that the rise in inequality that we saw over the last couple of decades, was importantly owed to automation and technology. And so you did have the hollowing out of the middle class in some parts of the world. You had an increase in lost income for low-skilled workers. So, and yes, you did have, on the other hand, if you were high-skilled, you earned a big premium and you made higher incomes. Now, of course, that doesn't mean technology is bad. Obviously, what it means is that you need to have the complementary policies in place to ensure that these technological developments, that automation that follows, does not increase inequality. And that does not happen automatically. You have to put the policies in place. You have to provide equal access, universal access to high quality education, high quality medical care, ensure that there is sufficient skilling happening. And in some cases, you would need to invest in specific regions. You would have to have place-based measures in some cases, especially if you find it is very hard to get people to move from shrinking sectors, growing sectors. You have to bring the growing sectors into a particular place. So this doesn't happen automatically, and one of the reasons that inequality did as badly as it did was because governments didn't do the necessary policies. So I think I'm, on the one hand, I'm very hopeful that technology will lead to better lives for everybody, better improvements in living standards. But on the other hand, I'm not going to take it as a given that this will not worsen inequality.
There's a very good question, Tim.
Yes.
There's a very good question, Tim, from the audience that I'm going to put to you because it's been sort of lurking at the side of this conversation. The question is, how are you balancing what's possible technologically with what's expected in terms of personal privacy and data security? And actually, the addition to this is, in the language of values, how do you articulate what it means to strike this balance? How do you go through that thought process and then express it to customers?
So, like any hard question in human life, the answer to that requires bringing smart people together, being transparent, and having open conversation and working a tough issue over time. I think the reality is that we are in the middle of a flux in terms of how society is striking the calibration between privacy and convenience, or privacy and value creation. I think consumer expectations are changing around the world. Some can debate that. And so I think what's critical that you do is you talk about what you do with transparency. You articulate some straightforward principles. You make sure you live by them. And then you monitor and pay attention to evolving trends over time. Keep your ear to what your consumers are telling you and be prepared to shift as expectations move. I think that's critical. It's just what you do to make sure you had a good customer experience on any product that you delivered. And the privacy convenience mix, I think, is just the same issue. And frankly, we will continue to see these issues evolve and emerge as AI technologies and as other technologies continue to build themselves into the marketplace. I do want to come back to Geeta's comment, which I wholeheartedly agree with. I think one of the fundamental issues that the last conversation revealed is that while the hollowing out challenge is clearly driven by technology more than anything, the public narrative is that it's about trade and not technology. And we have to do the things that Geeta suggested in order to address these issues. But I want to go back to my prior comments. We have to also correct the public discourse on trade, and that trade, absolutely, free trade across national boundaries in the digital environment will be critical to our future. And if we allow the current threads of sort of moving back to autarky to continue, we will have serious issues. And without growth, there will be not the kind of inclusive recovery that we desire. So I go back to saying, in addition to getting privacy right, and in addition to a trade agenda and an international tax agenda, there really needs to be a conversation about a whole variety of other issues: how we keep standard setting from fragmenting in economies around the world, how we get to a useful digital identity ecosystem, how we get to interoperability mechanisms between countries on privacy regimes. There is so much work to be done to drive a trade agenda that is an inclusive agenda that in turn then supports the kind of economic growth we need. All of those things need to be on the table as well.
Just to put you on the spot a little bit, I mean, one reading of recent history is that although European economies are often criticized rightly for not developing, not growing fast enough, and not having enough structural reform, in the areas of privacy and in some other aspects of regulation, actually where the European Union has gone is somewhere that other countries are starting to move towards, is more in line with popular expectations now than the more, shall we say, laissez-faire tradition countries. Do you think that's right? Do you think, in a sense, we are becoming more European in these areas?
I do, Stephanie. I think it's very straightforward. I do think that Europe has set the standards for privacy. Frankly, Europe is setting the standards for the regulation of the digital economy more than any other. And because Europe is an economic superpower, it's able to export those standards. And so if you look at the GDPR, the European Global Data Privacy Regulation, it has been applied now in Brazil. In fact, that law is now in effect. It has largely been adopted and now embraced again in the last election in California. So I think we're seeing European values around privacy being exported around the world. And our expectation as a company is that we need to live up to them globally. We do make the core GDPR commitments available to all consumers, no matter whether they're European or not. And so this idea, for example, of a right to be forgotten, I think that'll increasingly become a human right at some level. And I view that as a positive thing. I mean, I think the combination of different governing principles or different approaches that between the Anglo-American sort of and then Europe, that dialogue, I think produces better outcomes for the world. So we don't fear this. In fact, we embrace it.
I think it's an interesting theme for the New Economy Forum overall, that you can have government interventions that initially are suspected, or companies are suspicious of and say are not required, in the end become the underpinning of sort of public acceptance and moving forward with technology. It's very interesting. So they strengthen the system in the end, even if they look like they're intrusions initially.
Indeed.
Geeta, there's a very good question that's come in from Katika Roy, who's a gender economist and the CEO and founder of Denver-based Pipeline. We've seen that women have borne the brunt of the economic fallout. You mentioned this earlier, caused by COVID, with little comprehensive action to ensure improved gender equity. For example, we know that women's labour force participation has been set back 3 years in this 1 year. Her question is, what are the recommendations for both the public and private sector to ensure a gender-inclusive recovery?
So firstly, one of the important reasons women have been hit harder is the sectors that have been hit harder are ones where women are a greater share of employment. So for instance, personal care, hospitality. In those sectors, just if you look at the fraction of men versus women, there are more women there as opposed to, say, a sector like manufacturing where you have more men involved. So bring back economies as quickly as possible as this pandemic comes to an end, ensuring that there's not premature withdrawal of support, policy support. I think all of this is essential to bring back women into the workforce. And you've seen that happen, for instance, in Japan, where you had a very large number of women who came out of the labor force and now are going back in. Now, on the plus side, I'm hoping that these new forms of working from home actually make it easier for more women to be, to be employed, to go into the workplace. And one of the challenges has been to have a work-life balance, the flexibility that comes with it. And I'm hoping that we've learned in this process that there are flexible ways of working, and work from home can play a very important role. In some parts of the world, the problem, of course, is just simply the lack of access to opportunity. In developing countries and poorer countries, it is still very much the case that women's levels of education are much lower, their financial inclusion is lower, and I think the security that they have when they go out to work is far from ideal. And all of that has to be addressed, because if you want to return to high levels of growth, and let's be clear, even before this crisis hit, it wasn't as if the global economy was charging along a very high productive growth path. It was subdued growth. So we need to work on all those margins to bring women into the workforce, including childcare. I mean, I think that's hugely important. And these factors will be very essential to ensure that the world is on a path that's more productive, brings in more talent, and better living standards all around.
Geeta, thank you so much. We could talk a lot longer, but we did start a bit late because of our technical problems. Thanks for those of you who stayed with us during that time. And I know that a lot of people will have things to do at the top of the hour, so I don't want to go too far over that. But I've really appreciated the conversation with all of our panelists. We've heard a lot about some of the upsides of technology and some of the things that have happened in the thick of the crisis this year. A really great focus on how that can be turned to the future, all very much in the spirit of the New Economy Forum. So thank you so much to you, Tim Murphy, Geeta Gopinath, and Fabrizio Bloisi. Thank you to our hosts, Mastercard, and thanks to everyone who listened. Good evening.